The desk tonight, Tim Seymour, Karen Feinerman, Dan Nathan, and Steve Grasso. Welcome to all of you, and we're glad you're here. We're going to get to the drop in oil later this hour, but first, a market move we hadn't seen in 2 years. The Nasdaq rising another percent today, bringing its win streak now to 8 days in a row. That is the longest since November of 2021. The S&P and Dow now each posting 7-day runs of their own. Those two indexes now within 5% of their highs for the year, almost erasing that summer swoon. Let's check out the moves in the mega caps today. Amazon, highest close since September. Microsoft, record. Apple, Meta, Alphabet, all higher as well. Meanwhile, the equal-weighted S&P far underperforming the benchmark again. It is back in negative territory for the year. So does this divergence, Tim, give you reason to pause? I assume you would be more comforted if all stocks were taking part, not just a few.
Well, we've been debating this over the last couple of days. Do you want the breadth in the market? Do you want to see the equal-weighted S&P outperform the market-weighted, which we know has been – look, if you own market-weighted, owning the market, you've been successful. And if you think about today's close, you talked about the Nasdaq. It's within 1.5% of the all-time highs if you look at the triple Qs, the Nasdaq 100. It's made a relative cycle high to the S&P. So this move off of the last October lows, I mean, and I believe that market leadership coming from the Nasdaq 100 and then really that being led by the semiconductors is what investors should want to see to take the market higher. But we want to see breadth here. And we've talked about that underperformance. If you look at the RSP ETF or just equal weighted, we're talking about underperforming by almost 14%. And really, although you had some good news last week for that outperformance, it really hasn't. And so that's probably a negative tell. I'm sure Dan's got a view on this. We've talked about this over the years when Nasdaq stocks have outperformed. It's been narrow.
Isn't this the market 9% on the QQQs so far this year?
But it's all of these 10 stocks. I mean, if you look at the Nasdaq 100, those top 10 stocks make up more than 40% of the weight of it. And so, again, it's interesting to me today. I think this is a new closing all-time high for Microsoft today. It was a little higher in July intraday, and we were talking about that. You talk about cycle highs. I mean, for the entire bit of enthusiasm that was like being demonstrated in these top 10 names and a lot of other smaller cap names in the summer in and around AI, the day that Microsoft came out with that Copilot pricing, right? And they just started charging for it on November 1st. It was kind of an interesting bookend, right? So it topped out then, sold off 15%. The results were better than expected with, I think, expectations had come down. So the stock's been moving higher. It's literally dragging up a bunch of other names in the space. Adobe closed at a new 52-week high today. Look at Meta, which has been trading really well over the last couple of quarters. People didn't love that guidance over the last few months. It's been consolidating, and that's very near its 52-week high. So, again, I think if you are to Tim's point about the market cap weight, they're doing all the lifting again because I can look at no shortage of sectors that act really poorly.
And I think that's what they're going to continue doing. They're the most widely held. So this was about positioning. It was about rates. It was about issuance. So everyone got so negative. So they had to run everything back, short covering. Issuance, less than we had thought the market was going to deliver. Rates, we're closer to cuts than we are to the next rate rising period. All of that is a tailwind. And where does the money go? To the largest cap stocks.
To what's worked.
To what's worked. And every ETF, the passive investing is people own ETFs. They don't own individual names. Those top holders of those big, large cap names will continue to buy those dips. So, unfortunately, we're looking for an outperformance of equal weight. I just don't see it ever being longer lasting than a couple of days.
Karen, I mean, one of the ththings that was interesting to me last week, correct me if I'm wrong here, the Russell
Never
had
wrong,
a good
Tyler.
That's what I tell JoJo every evening. Let's talk a little bit about smaller cap stocks. Where are they in this?
I mean, they're off the mat, but
not.
Yeah, right. It's really, they haven't come remotely close to where, and the persistence of the underperformance has been so long. That's sort of surprising to me. So I own a lot of the Magnificent Seven, but then I own a lot of stuff that's sort of in that S&P underweight that really hasn't. It's just been getting cheaper and cheaper. Yeah. We've talked about things like Kellogg's or Kellanova, things like that, where I hate the name, but
rolls
there
off
is
your tongue.
What?
Rolls off your tip of your tongue.
Yeah, I don't know, but where they came up with that. But anyway, I think that there is some value out there. Nobody seems to care where value is right now. So I'm sticking with this sort of barbell.